Okay, so you remember all of those sec documents that I just showed you? Well, I'm going to show you the evolved version of me and how I go about reading and getting the information out of these sec filings. So we have a lot of them, right? So what I'm doing is I'm going to, that one won't work. I'm going to the different links, going to the different websites. I'm right-clicking the links. I'm pasting it into a Python list in this program. Is called a vector database. You may or may not have heard of it. It's basically a way to find correlations in words, perfect for something like this, for sec filing. So I'm going to do one more. I'm going to do the NASDAQ one. And I'm going to copy this, paste it in the vector database. And then we'll do one more, because I have quite a bit now in here. And we'll do the National Securities Clearing Corporation. Where did it go? Right here. That's going to be important. Copy this one. And then we'll do one more. I saw another pretty important one that we'll want to do. And then this way we'll be able to find any similarities between them. If there's any differences, if anything stands out. Here's the National Securities Market System filing. And so now we have a giant list of documents. And what we're going to do now with this is I'm going to go and click over to the summarizer. And let's see here. Actually, let's go just do this. Let's go to the vector. We're going to, I need to import that. Here's the URL. So what we're going to do is we're going to import that list of URLs from, what was it? Vector URLs, import, what did I call that? Sec rules. And then I'm just going to basically put sec rules right here. And then I'm going to run this file. And it should start generating summaries for each of those documents. So let's see what happens here. Actually, this program is going to take the documents and it's going to put them into the vector database. I may have to summarize them first, though. So I'm going to see if that's the case. And if that is the case, then I have this file here, which I'm going to go ahead and start running this one. What this one does is it'll actually take the files and save them all. So from vector URLs, import sec rules, and then I'll change URLs to sec rules, and I'm just going to go ahead and run this because I'm not sure if it's going to like putting that into a vector database before cleaning it. So go ahead and run this. And this will download all of the different documents, and it'll save it right here. So you see all these documents are starting to fill up here. Those are the documents that we just downloaded. Okay, so we have the documents. That one didn't work as expected. So now that we have the documents ready to go, I'm going to go ahead and put them into the database. But what's cool is we have all these documents on file now, all of the ones I just downloaded, so we can easily go over them. And we're going to go ahead and just summarize them. Let's see here. I'm going to try to run this again now. Actually, not this one, but we're going to go ahead and do summarizer. And we're going to summarize each one of those sec rules that we just got. So I'm going to post it in here, sec rules, and now we're going to run this file, and it's going to start saving summaries. So for URL and URLs, let's do it this way. Let's make a counter equals 0. For URLs and URLs, we're going to do counter equals counter plus 1, and then we're going to save it as summary counter.txt. That way it will save in sequential order and we don't have to worry about any documents getting repeated. So I'm going to go ahead and make a new folder actually called summaries/sec filings. That way we stay organized. Summaries, and then sec filings. And we're going to go ahead and run this bad boy. I need to fix my CUDA. CUDA makes the process faster, but it's going to go ahead and start processing these documents now with the summarizing model. and it's going to save the summaries one at a time into those subfolders, and that's what I'm going to use to basically gauge what's going on in the financial world. And then later with the vector database, once I get all these summarized and saved, then I can insert them all into the vector database, and it basically takes all the text and stores it as numbers. And then from there, you can find correlations. It's pretty awesome. Okay, so the first one we have Summary 1. The Securities and Exchange Commission is publishing this notice to solicit comments on the proposed rule change from interested persons. SIBO Futures Exchange, LLC, filed with the SEC on April 14, 2023. The exchange proposes to streamline the process to report an exchange of contract for related position or ECRP transactions. Proposed rule change revisions basically, they're trying to allow an authorized reporter that is reporting an ECRP transaction or block trade to the exchange on behalf of both parties to the transaction to do so in one step. So that one doesn't seem all that important. Here's the second one. The second one, the SEC is publishing this notice to solicit comments on the proposed rule change from interested persons. The exchange is filing a proposal to provide an additional means of access to its members for the MFP member firm portal. The proposal is available on the exchange's website. An API is a software-to-software interface that defines the data and the transactions that can be communicated between systems. So essentially, they are going to be setting up an MPF API, which is, I find that absurd they don't have one yet, that would basically, it's going to allow the industry members to automate processes that would otherwise have to be done manually. So they're getting more tech savvy here in the industry. Good job, Gary. Now, the exchange does not believe the proposed rule change will result in any burden of competition, blah, blah, blah. That one's just basically, pretty simple, straightforward. They're implementing an API for the member firm portal API. So yeah, how easy is that shit? And really what you can do with these summaries, you can take these summaries and then refeed them back to GPT-4, and then GPT-4 can summarize it further, break it down. You can search for specific topics, whatever you want to do. So we have one exchange implementing an API. We have one exchange that is going to be reporting ECRP transactions in one step rather than two. And then we should get the third one out here any minute. This should normally be faster. Of course, my CUDA is not going to work right now because I'm streaming, man, or I'm making a video. So this one's a little bit longer. The first two were really short. This one's about 10 times longer than the first two. But let me get the keyword extraction file. Let me see if I can run this and see if it can work real quick. This extracts keywords out of documents to try to find any correlation keywords. Or keywords, I mean. Oh, because I moved the files. That's why it's not working. Hold on. Let's do summaries / sec filings / summary I. Let's see what we get here. Same error. Okay, I'll have to fix that later. Anyways, let's go back to the summarizing. Anything yet? Nope, still working on that really long one. But yeah, that's basically it. Before I would have to, go and look and read them all and, jot down the most noteworthy points, put them in a PowerPoint presentation, and then reiterate them to you guys. But now we're doing it in real time, and an AI is doing it for us. So, not an AI. I shouldn't say that. Language model. So the third one's done. The Securities and Exchange Commission is proposing a rule that exempts certain investment advisors that provide advisory services through the internet from the prohibition on commission registration. The proposed amendments are designed to modernize the rules conditions to account for the evolution in technology and the investment advisory industry. Proposed amendments to Rule 203A-2E are designed to modernize the Internet Advisor exemptions conditions to account for the evolution in technology in the investment advisory industry since the adoption of the rule over 20 years ago. The Internet Advisor exemption provides an exemption from the prohibition on registration with the Commission that may otherwise affect certain advisors seeking to register with us. The 25 million assets under management test was designed by Congress to distinguish investment advisors with a national presence from those that are essentially local businesses. The Dodd-Frank Wall Street Reform and Consumer Protection Act amended certain provisions of the Advisors Act, including Section 203A, to, among other things, reallocate primary responsibility for oversight of investment advisors. The Commission originally adopted the Internet Advisor exemption as Rule 203A-2F, effective September 19, 2011. The exemption has been used with increasing frequency recently, with 149 of the 256 advisors relying exclusively on the exemption, registering after 2015. The asset management industry has experienced substantial growth and change since the exemption was adopted. There were approximately 23.6 trillion regulatory assets under management among registered investment advisors as of December 2003. Put that into perspective. 23.6 trillion back in 2003. The Internet Advisor exemption, however, was intended as a narrow exemption for advisors with 30 or more states. The use of technology is now central to how many investment advisors provide their products and services. So again, markets are evolving. That's what we've been all seeing for the last 2 years. You got to evolve with them. Now, there's some other things in here that they're talking about. The Commission established a narrow exemption allowing certain investment advisors to register with the Commission despite managing less than the minimum threshold in assets under management. As of December 2022, 266 advisors rely on the exemption, which is 38%. 38% report 0 clients, which is the median number of reported clients. It was going to be 6. The current Internet Advisor exemption requires, among other things, that an Internet investment advisor provide investment advice to all of its clients exclusively through an Internet-based website. The current rule would require that Internet investment advisors have an operational interactive website at all times during which the advisor relies on the exemption. The Commission is proposing amendments to Rule 203A-2E to reflect developments since the adoption of the rule. So with this rule, basically what they're doing, they're going back and they're revamping a bunch of stuff that's outdated because, again, technological changes. They say here the term mobile application generally refers to a software application developed primarily for use on smartphones and tablets. The amended rule would permit any form of mobile application technology through which the investment advisor provides digital investment advisory services. Mobile apps eat up more of our time than desktop usage or mobile web surfing, according to Techopedia. That's random. Anyways, yeah, you see what they're doing. They're going through and they're updating their systems. Internet investment advisors typically do not rely on the de minimis exception in the Internet Advisor exemption when they are eligible for commission registration based on regulatory assets under management. The Dodd-Frank Act reduces the minimum number of states in which an advisor will be required to register before becoming eligible for the multi-state exemption. Technology advances related to website development would better allow advisors to effectively utilize the 120-day rule. Let's see here. Anything else noteworthy? The low median relative to the average is an indication of skewed distribution within the population of Internet advisors. The data indicate that the majority of clients using Internet advisors are non-high net worth individuals, like you and me, plebs. We invite public comment on this topic. The number of investment advisors using the exemption at the end of 2022 was almost 18 times larger than it was in December 2003. Boy, I wonder why. The value of regulatory assets under management for advisors exclusively relying on the exemption grew from 107 in 2015 to 256 in 2022. The cost of notice filing is often the same as cost of registering with the state. Wow, that's crazy. Basically, the increase in its use suggests the exemption may currently be used in ways that were not intended by the 2002 rule. You think? The SEC is retarded. They're dumb as shit. The number of withdrawals by Internet investment advisors between 2013 and 2022 was over 5 times larger than withdrawals between 2003 and 2012. The proposed amendments would allow Internet advisors that rely on these mobile applications to generate advice to use the Internet Advisor exemption. So if they're relying on mobile apps to generate advice to their customers, they're going to be allowed to get the Internet Advisor exemption. Advisors without an operational website would be excluded from the pool of advisors eligible for the exemption. They got to have a website. That's the Office of Management and Budget. So the next summary here, let's see here. They're doing a collection of information, basically. That one's in comment period. Let's look at the next one. Okay. Oh, look, another. This is another one related to the API. So the Securities and Exchange Commission is publishing this notice to solicit comments on the proposed rule change from interested persons. The exchange is filing a proposed rule change. Is filing a proposal to provide an additional means of access to its member firm portal, or MFP. And again, this is API related, which is a software to software interface that defines the data and the transactions that can be communicated between systems. This is how I get market data into the Discord. I use APIs. That's the same one basically that we read a second ago. The next one says that two of them are APIs, and again, a lot of these you'll have the same filing because the NYSE has multiple exchanges, so they may all file for the same thing, which is what we're seeing here. Another MFP portal. Okay, the next one, the Stock Clearing Corporation of Philadelphia filed with the SEC on May 16th. These items have been prepared by the SCCP, and this is a comment period for this one as well. The trading price of NASDAQ's common stock has risen significantly over the past several years. The NASDAQ board believes this price appreciation may be affecting the liquidity of the common stock, making it more difficult to efficiently trade and potentially less attractive to certain investors. The proposed rule change would remove impediments and perfect the mechanism of a national system for the prompt and accurate clearance. Oh God, I hate that line. The blah blah line. Basically, it's all free and fair and all that fun shit. The SCCP does not believe that it's going to propose any burden, and yeah, they're going to be basically going over their methodology and fine tuning their mechanism for a national system for a prompt and accurate market. Any specifics on how they're doing that? Not sure. I'll have to wait until I get this in the vector database, and I'll get back to you on that one. But yeah, this is just how I'm showing you the process of how I quickly go through and have these documents summarized for me. But that was just a brief example. I'm not going to bore you with this with all the rest of them. I will get a more comprehensive presentation put together with all of these, and we'll go over what's important, what's not important, what's common practice, what's not common practice, similarities, differences, keywords, all that shit. We'll get into that later. But yeah, things are changing rapidly. Things are evolving rapidly. Very, very wise to be investing some time right now into learning some of this stuff because it's absolutely incredible. But anyways, that was about 4 to 5 SEC documents read rapid fire. I'll get everything out probably later tonight at some point, or if not, early tomorrow. So y'all have a good one.